Analysts at Meristem Securities expect the equities markets to remain positive in the near term following this week's bargain hunting on stocks at attractive entry prices. Sodiq Safiriyu, Investment Research Analyst at Meristem, joins us now to wrap up the week's trade. Thank you so much, Sodiq, for your time. So a good end to the week after a slow start, but overall, I think a big concern that must have been on the minds of many investors today was, this week has been the weakness that we have seen in the currency. But before we get to that, what do you make of the market's performance this week?
Thank you very much, Sodiq, for having me. So this week, as I said, the week ended on a positive note. The ASI actually gained. However, during the course of the week, we're seeing that sort of tie between the bulls and the bears. Before today being the tiebreaker, we had the markets closing up twice and closing down twice. On Wednesday, we had that negative close of minus 1.75%. And yesterday, we also saw it close up by minus 1.6%. We had tickers across the banking sector, industrials, making up moves. Notably yesterday we saw move on Downstem and FBNH, as well push and support the positive close. So yeah, generally we're still seeing a sort of pullback from investors. I would say investors are being watchful at some point, taking profit from tickers that have appreciated, and as well also taking advantage or taking bargain hunting opportunities on certain tickers that that are expected to grow or have good prospects.
But I imagine that many investors looking from outside in will find it very interesting to see that the market is doing relatively well after all the volatility we've seen in terms of the currency in the official, but perhaps more importantly in the parallel market. How do you describe that to an investor looking from outside in? What is the explanation you can offer? Because many will expect that with that type of volatility, certainly investors should be getting quite concerned.
Yes, very, very much correct. These are underlying issues, macroeconomic indicators that investors are very much watchful. And again, from an investor outside the country, the investor looking at the exchange rate and volatility around it would also be looking at either the equities market or the fixed income markets. On one hand, when it's looking at the fixed income market, it would be interested in how high the rates are on that level. You could see that, following the period where there was so much naira in the system and so much liquidity that drove rates to a very, very low position, we've seen the government, on behalf of the demo on behalf of government, trying as well to increase these rates. We've seen in two of these CBO's auction and the OMO auction yesterday as well. We saw our rates, are starting playing out on that end. So for foreign investors, despite the volatility, the foreign investor would also be much more concerned about where to get higher returns. And looking at the equities market and the bullish performance that it has taken since the implementation of these certain economic reforms, investors or foreign investors must still be tilting much more towards the equity side, considering the superior returns and even much more importantly, the positive rate of return that investment opportunity will be giving. So yes, the underlying issue is there, the fluctuation and volatility in the exchange rate. But as an investor, you have to also be watchful of which investment opportunity will give you, the superior or positive rate of return. And I think that's the reason why we might even be seeing, or we've been seeing them tilting much more in that end, and even more cautious as well. We'd see again, let me just quickly point out that when you look at the data from the NGX as regards the foreign inflows, when you look at the one for June, you would see that there is much more foreign outflow recorded in the month of June than we saw in the month of May, which would also, you can actually link that to concerns from investors as well on the, underlying macroeconomic indicators. I believe that the government needs to act, much more quickly in order to see these funds coming in, more consistently in order to stabilize the efforts.
All right. Very quick view on the issue about the volatility of the currency, and perhaps we will see some, if you like, second round effects of the harmonization of the exchange rate. We saw some impact on the financials in the second quarter, but now that we're seeing even more volatility in the third quarter, do you think this is likely to impact the earnings and perhaps, so I say, blow, dent the really good results we've seen in the second quarter so far?
Hmm. Well, I won't say that's the positive results that we've seen. Well, one of the reasons why we are seeing that positive earnings from the banks is because most of them, depending on their position, basically either net FX long position or short position, we see the banks, benefit from it. It's definitely going to cut across everyone, but it will differ depending on the position of these banks. So
Right.
yes, the volatility as well. Yeah.
Okay, unfortunately,
So
I
the,
really
the,
have to
the
step in there. I apologize, Sodiq, but thanks so much for the comments and the analysis today. We're speaking to Sodiq Safiriyu, Investment Research Analyst at Meristem Securities.